Here are the crypto top headlines covered in this video. Trader says meme coins will outperform everything else in crypto this bull run. Here's why. Next, Ethereum network is valued fairly, but ETH could still see 17x return, says Brian Russ. Also, judge supports SEC Securities claim in default order in Coinbase insider trading case. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Trader says meme coins will outperform everything else in crypto this bull run. Here's why. Kang says the crypto market may see Ether soar by 50% from its current price, but meme coins will witness a 5 to 100x increase in value. Andrew Kang, crypto trader and co-founder of crypto-focused venture capital firm Mechanism Capital, believes that meme coins will outperform every other digital asset in this bull cycle because the tokens are pure and upfront speculative vehicles. In a Sunday tweet, Kang stated that the crypto market might see Ether soar by 50% from its current price, but meme coins will witness a 5 to 100x increase in value. This surge will introduce a generation of new money meme coin elites, like the whales and old guards created through Bitcoin, ETH, and Solana. Meme coins to outperform everything else. Kang likened the meme coin ecosystem to a skill-based global lottery platform where players choose which brands to purchase tickets from. However, the payouts and odds are different, hence the need for the skills. Players who win jackpots do not do so by pure luck, but skill and ability. This causes everyone to believe they can find the next winner. And the more people that they get to buy the same tickets at them, the more likely they and their friends win. That's the best feeling, winning together. It's a multiplayer money game with virality built in, Kang stated. Revealing that the traditional global lottery industry generated roughly $300 billion in sales in 2020, with half of the United States as players, the trader envisioned the valuation of the meme coin space if a capital injection of a similar scale were to flow into them. We are going to reach some serious levels of mental retardation for meme coins this cycle, he said. The real pump. The Mechanism Capital co-founder further explained that the last bull run was the test pump for meme coins, just like Bitcoin's test run from $100 to $1,000. However, this bull cycle will see the tokens get a real pump as the last cycle proved their product market fit, increasing global acceptance and how they changed lives. According to Kang, the meme coins will outperform other crypto assets by a wide margin because the crypto masses will not care about fancy new technologies that give throughput benefits, and they will not fall for the 10,000th decentralized finance or DeFi farm, which retail traders have deemed self-referential Ponzi-like house of cards. Meanwhile, Kang thinks overweight DeFi and Layer 1 tokens are at risk of massive underperformance in this bull cycle. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Ethereum network is valued fairly, but ETH could still see 17x return, says Brian Russ. Using a unique quantitative approach, ETH Denver speaker Brian Russ told attendees that ETH is fairly valued but could produce a 17x return by 2033. Ethereum price has increased by 128% over the past 12 months and has gained 804,027% since opening for trading at 43 cents on October 20th, 2015. Despite this phenomenal growth, is there room for Ether price to rally 17x from its current trading price? Brian Russ, the managing director of BMO Financial Group at the Colorado market, thinks it is a possibility. On March 1st at ETH Denver, Russ spoke about how traditional finance analysts use various quantitative models to value a company, a blockchain, and its token. Selecting the Ethereum network as an example, Ross detailed how his methodology is comprised of the discounted cash flow, precedent transaction, market comparables, and Metcalfe's law models. Ethereum could currently be 15% undervalued. Starting with the discounted cash flow, or DCF model, Russ explained that the model says that a company, or in this case a blockchain, is worth the summation of all the profits it will generate forever. The model projects forward what those profits might be and then applies a discount rate to bring those profits back to 2024 chain dollars for a more accurate representation of what the project is worth today. To determine what cash flows are and how quickly they are growing on the Ethereum network, Russ suggests looking at Ethereum wallet growth. Data from Etherscan shows wallets on Ethereum growing at 36% annually for the last 5 years. Assuming a 33% annual wallet growth for 10 years, Russ estimates that 50% of the global population, or 4.5 billion users, could be using Ethereum by 2033. Russ concedes that half the world's population using Ethereum in 10 years is a lofty assumption, but it remains a possibility. To determine the type of profit that Ethereum generates, Russ looks at the amount of Ether issued and burned as a proxy for Ethereum revenues. If we take the burn, or the revenue, minus the issuance, or the expense, revenue minus expenses equals profit. The result is $1.8 billion in profit generated by the Ethereum network in 2023, and growing this figure by 33% per year for 10 years gives Russ's $458 billion future value of the Ethereum blockchain. After the 10th year, a more conservative 5% growth rate is used, and the Fed funds rate, or risk-free rate at 5%, is applied to bring the cash flow figure back to 2024 dollars. The resulting $400 billion valuation reflects a 15% premium and suggests that Ethereum blockchain is undervalued by this amount today. Precedent transactions give insight into Ethereum's current value. Similar to real estate, estimating the value of a company or property requires analyzing competitors' revenue, cash flow, and market capitalization. Comparing Ethereum against other early-stage tech companies that achieved dominant market share and analyzing each company's price-to-earnings ratio during their first profitable year, along with the average P/E ratio on a 5-year basis. The results suggest that the Ethereum network's total value is $312 billion, meaning, according to the model, that Ethereum is currently overvalued by 20%. How Ethereum compares to other blockchains. Comparing the Ethereum network to other Layer 1 projects, Russ uses a formula that takes a blockchain's market cap and divides it by the total value locked, or TVL, on the same blockchain. Taking the sum of the market caps for the top 6 blockchain projects and dividing it by the total value locked on the 6 projects gives a total MC to TVL figure of 8. Applying this figure to the Ethereum network, 8 times Ethereum's TVL at $47 billion shows the blockchain valued at $376 billion, suggesting that the blockchain is approximately 6% overvalued. Metcalfe's Law. Metcalfe's Law is often used to estimate a network's valuation. According to the model's creator, Robert Metcalfe, because of the way new technologies scale, a network's valuation and future value should be evaluated on an exponential basis rather than linear. The law states that the value of a network is proportional to the square of the number of connected users. Using data from Etherscan and looking at monthly active Ethereum users, 15 million, squared gives a $225 billion valuation for the Ethereum blockchain, suggesting the network's true value is 44% below its current $400 billion market cap. Russ notes that using Metcalfe's Law model kicks out a figure that is the most out of line with the other models, but there's a catch. So is Ethereum undervalued or overvalued? Taking the various outcomes from the four models used and adding a simple weighted average of 25% from each model gives an implied value of $345 billion or $2,875 per Ether, according to Russ. Russ said, "The ultimate conclusion is that the Ethereum blockchain based on this model is fairly valued plus or minus 15%. That's not the most exciting conclusion, but this exercise is important." Russ concludes that while the model's ETH price valuation might not excite investors who expect ETH price to rise much higher than its current value, the use of quantitative-based models gives more accurate and conservative estimates for a project's true value. The use of multiple valuation models can also help investors identify arbitrage opportunities. For investors, Russ says his model allows the creation of deep convictions about Ethereum's current value and its potential future valuation. Through the rigorous quantitative approach, we're able to determine that the valuation of the Ethereum blockchain is actually fair. We think it is fairly valued, and the reason that's important, especially as investors, is because it gives us the conviction that we are investing in something at fair value, and with that conviction, we can hold on to it for the long haul, for 3 years, 5 years, 10 years. Imagine if you had done this exercise and determined that Ethereum had this upside potential back in 2016 or 2017. Can Ether price do a 17x return? Russ hinted that Ether could possibly do a 17x return from its current valuation. Referring back to the 33% per year growth of Ethereum wallets / profits, Russ said that using simple compounding and a 10-year view of this trend holding means that $1,000 invested in Ether today would be worth $17,319 by 2033. Our next top headline: Judge supports SEC Securities claim in default order in Coinbase insider trading case. Rules for default judgment required the judge to acknowledge the SEC's full argument. Judge Tana Lin partially satisfied the United States Securities and Exchange Commission request for a default judgment against Samir Rahmani, one of the defendants in the case of former Coinbase product manager Ishan Wahi and co-defendants. At the same time, Lin found that secondary sales of some cryptocurrencies were securities. The SEC requested a default judgment against Rahmani, who appeared to have fled the United States and has not responded to court summons. Ishan Wahi and his brother Nikhil were charged in July 2022 with insider trading and wire fraud. The trades in question were with tokens that were slated for listing on Coinbase, made after Ishan Wahi informed his associates of the cryptocurrency exchange's plans. Lin, a judge in the U.S. District Court of Western Washington at Seattle, agreed to the SEC's demands for a permanent injunction against Romani, as well as civil penalties and disgorgement, but did not agree that the defendant should pay prejudgment interest on the disgorged funds. Nikhil, Wahi, and Romani allegedly made $1.5 million on their illegal trades. The SEC claimed that at least 9 of the 25 tokens Nikhil Wahi and Romani invested in, on the advice of Ishan Wahi, were securities. The 9 tokens were Power Ledger, Chromatica, DFX Finance, AMP, Rally, Rary Governance Token, Deriva, DAO, LCX, and XYO. Lynn wrote in her order, the allegations in the FAC established that the tokens Romani traded were offered and sold as investment contracts and thus were securities. FAC may refer to first amended complaint, but it wasn't specified in the order. Nevertheless, Lynn accepted the SEC's argument whole and repeated its outlines in her order without challenging them. Patrick Daugherty, head of the Foley and Lardner digital assets practice, told Cointelegraph, Judge Lynn misstates the core holding of SEC v. W.J. Howey Company because she neglects to mention the Supreme Court's requirement of a contract, transaction, or scheme, quoting the Howey case itself. Without a contract, transaction, or scheme, there is no investment contract, period. Coinbase Chief Legal Officer Paul Grewal agreed with that conclusion, saying on X that the SEC was pushing against a completely open door in the case. Grewal wrote, not only is there no one pushing back on anything the SEC says, the judge is required under the applicable rule to take everything the SEC says in the complaint as true, no matter how far-fetched or plain wrong it is. Ishan Wahi initially pleaded not guilty to insider trading charges, but changed his plea to guilty in a deal with the SEC in February 2023. He was sentenced to 2 years in prison. His brother Nikhil was sentenced to 10 months. Romani's defense counsel, named in the order, David Kornblau at Denton's, did not respond to a Cointelegraph inquiry by publication time. The email address listed in the same document for Romani was not accepting mail when Cointelegraph tried to connect with Romani. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.